Naval just joined us coming back from an international trip. So I guess probably one of the more recent trips you've taken, had some time away from the Valley. Just be curious, like, what did you think when you were on the plane and in Asia about what's happening in Silicon Valley? Did you have some time to reflect?
Yeah, it's a big world out there. There's a lot of other people doing a lot of other things. And I think we lose sight in the Valley of just how far in the future we're living. Between the Ubers and the Postmates and the Instacarts of the world combined with order ahead and the fact that everything just kind of works. That said, I was pretty shocked. First, we were on an island in Thailand, and then I was in India, in Delhi. And both places I ended up using Uber a lot. So Uber had just launched in Phuket, Thailand, if you can believe that. Wow. So I was taking UberX around there. And in India, I took Uber and pretty quickly became, and disclaimer, I'm a tiny investor. I'm probably the smallest investor in Uber, but I'm still on the cap table. Uber in India was so much better than the taxi system and so much better than the competitors. And the need for it is so obvious and glaring. They were so cheap, $2 to $4 to get across Delhi, half an hour in the car, and you get out, it's like $3 US. It just was very clear to me that that's going to be Uber's second largest market. It's gigantic. Wow. And there's so much opportunity left on a global level. At the same time, the international entrepreneurs aren't sitting on their hands. So just through a little bit of tweeting around, I discovered very quickly that India already has its own equivalent of Instacart and has its own equivalent of Postmates. And all of these companies are pretty consistently right now valued at about a fifth of their US equivalents, or somewhere kind of in that ballpark. So the rest of the world is moving along. Silicon Valley's tide has risen so much that we lose sight of the fact that it's rising everywhere. And the capital is concentrated here, the networks are concentrated here, but the opportunity is truly global.
Yeah, and did you meet with any of these, either in Thailand or in India, any of the founders, operators, or people in the investing ecosystem?
I did not. I sort of have a bad habit. I've been running AngelList now for 4.5 years, and I intend to do it for a long, long time. Yeah. And to stay sane, I very cleanly separate my business life and my personal life.
So smart man. So as you were away too, were you, like one question I wanted to ask you was, what do you think in the Valley is happening now that's healthy for the ecosystem, and also at the same time, what you see as potentially unhealthy for the ecosystem?
Yeah, I mean, it's probably the same thing. It's a democratization of entrepreneurship, really. The average company size is getting smaller, more people are starting companies. I think all of that is healthy. I think long-term people want to work for themselves or in small teams. They want to make a difference. They want to change the world. So all of that is healthy. What's unhealthy is sort of when it gets ahead of itself. So we still seem to get, for example, a lot of founding teams that don't have much tech talent, or companies that aren't really operating in a technology leveraged way, or companies that are raising money that shouldn't raise money. They would be fine as businesses that did not raise money, but because they've raised money, they have high expectations. And now all of a sudden you've taken something that wasn't a 10x venture-backed business and you're trying to turn it into a 10x venture-backed business. So I think the froth, the little bit of bubbliness that's going on, and it's a global level. It's central banks everywhere printing money, and money's looking for a return. So what we're finding here, the froth in the housing market, for example, that's not healthy. What's going on with the housing market and the haves and have-nots. But it's all kind of related. I don't know if you can really separate it. I don't know if you can take the good without the bad, or vice versa.
Understood. And then, in terms of, when we started the conference today, Paul and Keith Raboy, who were on stage, were talking about the fragmentation of talent. Is that something you're also seeing as being potentially unhealthy for the ecosystem, or we just got to have to go through it?
Yeah, I don't think that's unhealthy. I'll take the contrarian point of view on that. I think the fragmentation of talent argument comes from people who very often say, well, I've invested in the best companies and they should be able to hire everyone. How come they can't? I actually think it's healthy. I think people, again, I'm a big believer in entrepreneurship. I think everybody wants to work for themselves or in a very small team long term. So I think it's an inevitable consequence. So in economics, there's this thing called the Coase theorem. Sorry, not the Coase theorem. There's a principle where the size of a firm grows based on the communication cost of the nodes inside the firm. And externally, you get limited because it's very hard to coordinate with other companies. So you keep growing your own company because the communication costs are lower than interfacing with other companies. But in this modern age, through APIs and standardized products, companies are plugging into each other like jigsaw pieces. And so the companies themselves can get smaller and smaller, and more things can be contracted out. When you look at a modern company, There's the obvious stuff like I use GitHub to host my code, and I use Amazon for the web services, and I use Twitter and Facebook and Google for marketing. But there's less obvious where people are now outsourcing their sales, they're outsourcing their customer service, they're connecting, look at what's the meteoric rise of Slack and the communications network there. All of this is leading to a smaller, efficient size for firms.
And you're saying the atomization of these companies make it so that the fragmentation of talent, for the most part, could be okay?
It's good. It's a sense that the system isn't working. It's an indication the system is working. It's only bad if you need to deploy $30 million into a single company.
Right, because you can't aggregate the talent.
Right.
Okay. All right, so next topic would be, and we debated this also on stage a little bit, around how you call around. And the reason I keep harping on it is I feel like a lot of people, and myself included actually through this, you get in a trap of thinking, okay, I've done my seed, then I'm going to do my A, then I'm going to do my B. And in reality, it's a lot bumpier than that.
Yeah, two things are going on. First is there's been a very clever shell game, I think mostly from the VC to LP community, of creating this thing called a seed round. What is the seed round today is in Series A, no question in my mind. It's the first round in the company. In fact, you could even argue the accelerator round is a Series A, the seed is a Series B, and venture is Series C. But I don't think any VC general partner can go to the LPs and say, oh yeah, we're now in the Series C business. We don't do A's and B's anymore. I think it would be too much of an about face, and the LP community hasn't caught up to that. But these companies are now raising large seed rounds, so-called seed rounds, to get to product market fit, and then they go raise growth capital at staggering valuations if it succeeds, and if it doesn't, it goes to zero. So these are A rounds in my mind.
And so is this just wordplay, or does it end up hurting any parties along the way?
Well, I think it's wordplay, but it has a consequence. I think Sand Hill Road became very, very powerful because they were the first credible check into the company. And I think a lot of venture firms are losing that position. And I think over time, that causes irreparable brand damage. So if you look at a lot of the rising brands, the first round capitals, the True Ventures, the Floodgates, et cetera, you guys, all the seed funds, they're building the new Series A brands. Y Combinator, huge brand, right? Yeah. First investor in really, really matters. I'd say first credible investor. And I think entrepreneurs are very good about remembering who gave them their first big break.
Got it. And with that, that's a really good segue into AngelList. We were really excited that you could join us. We were thinking when we were designing the program, who's really shaken up early stage investing, and we thought Paul Graham and Naval. So let's dig into AngelList a little bit. It's been about a little over a year since syndicates were launched.
Yep.
Walk us through how let's start with individual syndicates. I think when it started, there were a lot of people who had big personal brands, big social media, a large social media presence, who were able to attract dollars from their syndicate from the crowd.
Yeah.
Do you think that is going to stay that way, or do you think data will start to slowly emerge about who actually was a good investor, who actually was an okay investor?
Well, we're absolutely tracking the data, and we will start showing it as soon as it starts becoming meaningful. These things take a while to generate returns, but in the meantime, we're also trying to get past data from the syndicate leads, and you'll see us exposing that. I mean, all of this stuff is obvious, but it's something that we'll do in the roadmap. I think you can also look at the quality of the backers. So now in the syndicate pages, we let you feature backers, get reviews on backers, show how different ones can add or not add value if they're passive backers. So the entire syndicate as a whole is who you raise money from, not just from the lead. You're definitely going to see a much more data-driven approach. And I think some of the top syndicate leads, for example, Elad Gil is way up there in the rankings. He does not self-promote at all. I should probably be up here promoting him. Even Gil, I don't think Gil Pincina, even though he's top of the leaderboard right now, I don't think he had that much of a self-promotion presence before AngelList.
So it's changing a little bit.
It is changing, absolutely. And to some extent, these are their backers, these are their LPs, these are the people that they know how to communicate with. So of course, to the extent that they can communicate with those people, keep them up to date, treat them well, they are going to pull in capital based on that. Just like in every VC firm, there are usually one or two partners who have the LP relationships and spend a lot of time working on those. So it's not that...
Got it. And advice for people out here who are thinking about starting on AngelList and maybe don't have that following, sort of like Twitter, right? If you open up Twitter, it's hard now to kind of build that following. You got to invest a lot. What would you say to people out there? I think there are a lot of people who are here who are thinking, okay, I want to start, and how do they get their feet wet today?
Yeah, so one of the nice things about the syndicates model is you can invest as little as $1,000. At any given time, we have about 40 companies online raising money, so there's a good selection. You can see a lot of signals as to who's investing and who's not. Or you could just make it simpler. If you go to our funds page, angel.co/funds, we have no fee carry-only funds, which will automatically diversify across 100 blue chip deals. So you can get started that way. But it's a tough business, and it takes a long cycle, so you got to be in for a long period of time. You are going to lose the majority of bets that you make. You do have to be very diversified. You have to go in with good investors. So you have all the tools available to do that. I would say go slowly. There's no reason to be quick, and we are in a bit of a frothy period right now. So this is a time to learn, but not necessarily to make the most money.
Great. Okay, and so the next type of syndicate would be, let's talk about firms. So technically, a traditional VC firm, let's say Andreessen Horowitz or Union Square Ventures, could actually go and start a syndicate. Have you had firms approach you? Is that something you think is coming, or maybe people are still feeling out?
Yeah.
What's your view on that?
The firms generally don't need to. The more established you are, the more happy you are with the current system, the less you need to change or innovate. That's true in any market, and this is no different. It's the up-and-comers who will do it. Maybe the one exception is Foundry Group, who has been very forward-looking and very aggressive. Just like I think Brad Feld was an early adopter on Kickstarter, and he just loves products and entrepreneurship. I think the same way they sort of embraced our platform right at the beginning. I think you will see more firms, but firms are going to use it more for private syndicates. Yeah. They're going to use it more to bundle up their LPs into a pro rata or a big deal where they don't have sufficient capital. Or they might use it for a scout model like Atlas does. And disclaimer, Atlas is an investor in us. But they basically have 30 leads that they back in Boston who essentially do small deals, and then Atlas will come in later and maybe do the B or the C.
Great. And then, yeah, the final type of syndicate I wanted to talk about, and I've noticed, at least in my own investing over the last few months, that a lot of investors and a lot of companies are choosing to keep the financing private, not do the big blast article on social media. My belief is that it's because there's a lot of competition out there and people are pivoting and stuff. So private syndicates, I think maybe a lot of people don't know about that, but maybe you can just explain what they are and then how people are using them.
Yeah, 20 or 30% of the deals right now on the platform are privately syndicated, which means that they're only available to the lead investor and to the backers that lead investor has accepted in advance. And the company and the lead investor also get a private link that they can forward around and invite other people into the deal. That does seem to be getting more and more popular, and some of the best deals do run privately.
And any hypotheses as to why private syndicates are becoming more and more popular?
I think it's just getting people aware of what they are. I agree that there is a concern about competition, but that trend line is running in the other direction because people these days tend to launch very loudly, they tend to get some traction, they trumpet it in the news, and then they go and they raise money. AngelList and the syndicates model and the online fundraising in general could not have existed 10 years ago because every deal was stealth before it raised money.
So a couple other questions about AngelList. So one thing I wanted to discuss, people, it seems like in the last 6-8 months have been using Product Hunt to find a lot of products, whether they're just sort of simple off-the-shelf stuff or things that could turn into companies. Are you finding any ways potentially to work together? Because it seems like the user-generated activity and the crowdsourcing of Product Hunt sort of fits nicely into
Product Hunt is a great product. And I would say I think the future of this industry is there's going to be a series of interlocking platforms loosely coupled together, and you could see Product Hunt in there, you could see Mattermark in there, you could see a bunch of others. I actually think Product Hunt's destiny in some ways is broader than ours. I view it as not focused on the venture industry. It's kind of the new app store for the web.
Yeah, I think a lot of people who would like it but critique it will say, oh, well, it can't spread, or it's a valley or sort of startup-y thing. You see a broader
I think what Ryan's built through passionate community building and good work is he's built a place where users can surface great products for each other. And so AngelList, for example, what we do today is we drive you money, hopefully, and we drive you good talent. I think where Product Hunt excels, they can drive you customers, which is equally, if not more valuable. And it's sort of a broader thing that applies to all products, not just venture-backed companies. Right. I think if they were to limit themselves to venture-backed companies, they'd be doing themselves a huge disservice.
Sure. And then as an operator inside AngelList, how are you and your team thinking about mobile? How are you thinking about different revenue lines beyond talent? what's kind of keeping you guys up at night?
Yeah. Fundraising is a crazy complex product. It's too complex. We need to simplify it. We need to make it better. It takes too long to close a deal right now. There's too much uncertainty. We're rolling out pre-funding where people stage money in accounts in advance. We're handling our first pro ratas. We have to learn how to handle distributions, secondaries, those kinds of things. Keeping it all legal, compliant. The banking infrastructure, the KYC infrastructure is changing underneath us, accepting Bitcoin. That's going to keep us busy for a half decade. Going up into some Series A territory, onboarding more institutional capital, keeping us very busy. Talent, our team is still really just one person full-time on it and a few part-timers, so we have to scale that up a little bit. I think that's enough to keep us busy for a long time. We do want to work on mobile. We're just a very small team.
Yeah. And actually, one question around team building. I know that when you started, it was very operational focused. People were all writing code. Are you finding that as you're growing, you're bringing some people in who are doing more biz ops and non sort of work?
A little bit. We have really only about 5 or 6 non-coders in the company out of 22 people.
Yeah.
And those 5 or 6 are heavily overloaded, and we sort of like it that way. And we just like to productize everything. We're in it for the long haul, and I don't think you can be a long haul company, at least in the market we're in, if you're large and running a high burn rate and you're kind of ahead of yourself. It's also our job to be a thin, invisible platform, not to have people out here shaking hands and sort of handing out business cards. Enough people have that job outside of AngelList.
Understood. Just before I forget, if you guys have questions for Naval, and I hope you do, there are 2 mics here, so in a few minutes you can walk down here. So since we're at post-seed and we're talking about, actually we had tweeted about this maybe months ago, talking about how seed is a process. You have entrepreneurs who are raising rounds, it could be over months, right? Many months. How could an investor leverage that trend and also use AngelList in that way? And have you seen people do that?
Yeah, Paul Graham talked about high-resolution fundraising a while back. He wrote a good blog post on it, on how companies were going to be continuously fundraising. And as usual, he was kind of ahead of his time. It took a few years, but I think it's finally starting to materialize, where you can see that good companies are sort of always having a round open. And I think that sort of a continuous fundraising process is easier to do online than it is offline. So you'll see us doing some work there to support it, but a lot of the pieces are in place now. The Y Combinator safe note and convertible equity and convertible debt sort of make it more possible to do. I would say it's actually the angels are of the mindset that when they want to invest in a company, they're ready to invest at almost any time. They don't necessarily think in terms of discrete rounds. It's more venture firms who think in terms of discrete rounds. And the problem with trying to figure out how to invest on these in-betweeners is how do you price it? Uncapped notes aren't very economic for angel investors. The founders don't want to do it at the last round valuation. So there's always some discussion about how to price it properly. So I think if we can tackle that, these continuous rounds are definitely the future.
I mean, one thing I've just noticed is that there's no governor on the price of the round up, so that there's an excess of capital, so an entrepreneur can preserve their equity, which is right. And then it seems to oftentimes, at least in the last 6 months, seems to hit some tailwind when they go to larger institutions. Do you find that is something where people are testing the market, or that's just a new normal?
Yeah, so the valuations are actually down slightly, at least on our platform, according to our data, since 2013.
Okay.
2014 is slightly weaker, not a lot weaker, but it is slightly cooled off. Valuations are still high by historical standards for seed rounds. They're actually low for A rounds, in the sense that if you think of these as A rounds, back in the day, A rounds used to price at these numbers or even higher. I think the math still works as long as you find a winner in your portfolio. If you don't find one of the big winners, the math doesn't work. So basically, you overpay for 99% of companies and you massively underpay for 1%. That makes the whole system work.
Yeah, I guess it all works out in the end. So, okay, random question. And someone on AngelList who maybe you discovered through AngelList who's doing really interesting things on the platform that maybe people don't know about.
Doing interesting things on the platform.
Yeah.
There's some interesting emerging syndicates which are really taking advantage of the backer model. So for example, David Weekley launched drone.vc. Yep. He's only doing investments in drone companies. He's got a bunch of backers who are into drones. So you kind of get a drone enthusiast network.
So how did David go and grab those backers?
He literally just emailed me and said, I'm creating a VC firm on AngelList. Here's what I'm calling it. Here's my manifesto, and I'm going to go get my friends who are into drones on it. So I didn't have to do anything. He did it very self-service. Anshu Sharma, who I think was at Salesforce, He's got a syndicate that has a whole bunch of VPs out of enterprise software companies, so they have an incredible Rolodex and they can help you sell. So I think kind of these syndicates where they're taking a vertical slice and they're bringing in backers, they're bringing in capital and bundles of people who can add value is pretty amazing.
Right, and that takes away the need for someone like David to actually go and spin up a fund.
It takes away the need for him to go spin up a fund. Then when he invests in a company, a drone company, that company can reach out to the underlying backers for help. David also will run deals past his backers before he does them. So he'll write up a synopsis. He'll privately message his backers on the platform, ask them, what do you think? Should we do this or should we not? Do you guys want to double down on it? Any feedback, any competitors?
And how much is he typically investing in a range in a round like this?
I think he's still pretty small, so we're talking like 100 to 200K, but he's kind of working his way up.
And then how much of that is his own versus coming from the backers?
Generally, most people start with around 5 to 10% come from their own, but obviously for the very large syndicates, that just diminishes over time.
Got it.
But that's a very important signal. I think over time, you're going to see us exposing things like how much is, what's the lead's track record relative to their peers? How much skin in the game are they putting in relative to their peers? What are their investing velocity? What's the quality of their backers? What are their feedback and ratings from the startups? How much have they helped the companies? What percentage of companies have gone on to do a Series A? We're going to pick up all this data and expose it.
Oh, wow. That's going to be great.
Great for some.
What's that?
Great for some.
Yeah, great for some. Yeah, I don't see anyone down here for questions, so we'll keep going. Let's see. What are things that, as an entrepreneur, and obviously you've navigated a lot of regulatory hurdles, what's some things that kind of keep you up at night, or things that you see as even potential risks around general solicitation, or people maybe sort of squinting a little bit at what AngelList is, or just crowdfunding in general?
Yeah, general solicitation I don't worry about, because if anything, the law there has made it easier. You can generally solicit now, and if you do, you have a higher accreditation test that you have to do, but at least you can do it. In the past, general solicitation was just illegal. It would blow up your round. And we've built all the tools online to do it for free. So even if you're not using AngelList, you can still just go to angel.co/accredit, send your investors there. They can get a free general solicitation compatible accreditation report and that your lawyer can use. So we moved that whole process online, which was very nice. Title III true crowdfunding is still not implemented yet. The SEC hasn't rolled out its final rules. That's a very hard, very thorny problem. So one thing that keeps me up at night is that to get the Title III rules working, they might change Title II in such a way that it makes life hard for everybody in this room. Another thing is, frankly, unsophisticated investors. Even if you're accredited and you don't know what you're doing, you may put too much of your money into 1, 2, 3 startups online and lose it. So for those kinds of people who aren't very sophisticated and they try and invest with a platform, anyone can sign up and say they're accredited, but then when you actually try and invest, we trap them, we question them. If we don't think they're very sophisticated, we'll either cap them, reject them, or suggest they invest in a fund that automatically diversifies for them.
Got it. And how about actually thinking, one of my favorite lines of yours is like unbundling of venture capital. Mm-hmm. Do you think AngelList can actually be unbundled in certain ways?
For sure. I mean, I think you can see a piece of Product Hunt, is kind of taking away that customer acquisition piece. Yeah. So that's a bit of an unbundling. The data side, someone like a Mattermark can combine a Product Hunt and an AngelList and a Crunchbase and LinkedIn and social signals. And so, that's not a space we're going to own. We're going to be a provider into that. I think it's healthy. In fact, I think it's unhealthy that we're running 2 businesses at once with fundraising and talent, both of which are about equal size. I mean, I checked the stats. It was mind-blowing. Last week, 3,000 companies logged into talent and looked at candidates. That's we don't hand sell anybody. We don't have a sales force out there.
Do you have larger technology companies from the M&A side approaching you, or approaching companies directly from AngelList?
They definitely have in the past. We don't have a structured tool for them to do that. I don't think they do it systematically. We've had bankers approach us and ask us about building a tool to surface that all for them. We just haven't had time. Frankly, anyone who's smart can go in through the API and do it themselves, but it takes time for people to discover these things.
Okay, so that's good on AngelList. We've got about 5 minutes left, and I mean, we'll just generally pick your brain on Valley stuff. What do you think is happening in the Valley that no one's talking about that they should be talking about? The stuff that hits on social media that people get outraged by. What's actually happening that's giving you a lot of confidence in the Valley?
Well, sorry, giving me confidence in the Valley?
Meaning like stuff that's happening that more people should know about.
Oh, stuff that more people should know about that's going on in the Valley. I think we just have such an unfair advantage living here. We're living so far in the future that you can kind of see how the rest of the world is going to work. Imagine the day when Order Ahead, and I'm not an investor there, although I wish I was, works for every restaurant in India. Like, how is the world going to change then? So I think we're just so far in the future. We're actually probably underestimating the impact of the winners. Especially once you get overseas and you get into mass populations. The other thing that struck me in India was just how bad the cell phone networks are. I got a local cell phone, and literally it seemed like every 30 seconds Vodafone was spamming me with an ad, and I literally want to turn SMS off. And it kind of made me realize why WhatsApp and Line and the others are so successful out there. It's one of the reasons is because they've obliterated the SMS channel, and it costs money every time you want to send and receive an SMS. So we just have this unfair advantage here, the value of living in the future, which is a great thing. One thing that I think people don't think enough about, or if they do, they just can't do enough about it, is Silicon Valley today, the engine that's driving it is the mobile phone and smartphone adoption across the world. And the reason why small companies can exist and succeed is because there are two app ecosystems that compete with each other. And unfortunately, mobile is not an open platform. And so if one of them wins, if Apple or if Google swallows up all the market share, we may end up in a Microsoft-like situation back in the 90s when the dominant amount of wealth created went to the Wintel monopoly, and then there was a little bit left over for startups, and there just wasn't a lot of room for startups to operate, right. So that would be a tragedy.
Well, and a lot of people have been saying that mobile is maturing because distribution is so hard. So this would be my final question to you: is as somebody who's looking at the landscape pretty broadly, mobile was clearly a huge platform shift, and companies like Uber benefited from it. What other platforms excite you? I know you're deep into Bitcoin, but beyond Bitcoin, what emergent platforms do you see out there? Are you seeing more and more stuff around crowdfunding, around drones?
Yeah.
And where should entrepreneurs, if they're thinking about their next company and maybe originally had an idea for mobile, but now are thinking about more platform shifts, where would you encourage them to poke around?
Well, I don't think mobile goes away. Mobile's still so big, and I don't think the opportunity in mobile goes away. But it's kind of interesting to see, like on the enterprise side, people still haven't fully adopted mobile. Like every enterprise app needs to be redone as a mobile app. And there's always room for someone doing something much better. Look at Slack. For example, Slack came up out of nowhere. We switched internally to it wholesale as a company. We love it, the product. And Slack is something that could have been built 5 years ago. There's nothing about it that's brand new. It's just better executed. You could see, and my wife was asking me, she was saying, how do I get a version of Slack for my friends? Why do I have to be business only? So there's always new opportunities, and I think mobile is the huge one for the next few years. And even to the extent that Bitcoin and drones and other things are happening, they're really truly mobile enabled. I don't see the VR stuff coming up as fast. Maybe I'm not as close to it, but Oculus is cool. Gave me a bit of a headache.
Well, since we have 2 minutes, we should debate this, because my view on mobile is that it is a great customer acquisition channel, touch point. But to actually get to venture-like scale is really, really hard, and that's why people are monetizing offline. Yeah. So are you seeing anything on AngelList or anything in your own investing that would show otherwise? That feels like most people are waiting for traction or scale to hit, and then they cram in to try to invest.
Yeah, that's very much true. I mean, that's certainly true for the Series A, Series B crowd. There's so many companies out there that people can't pick winners until it almost looks like they've won. And as you know, investing is actually more of an emotional decision where you rationalize it afterwards to yourself as to why you made that commitment. So good entrepreneurs know how to take advantage of that. They know how to generate the heat and the curves around stats. Back to your point that some of your panelists talked about earlier today, the ability to recruit great talent is actually continues to become more and more of a differentiator. How good of people can you recruit, and can you hang out there long enough? It's distribution you can still always hack. If you have a great product, you can always figure out a way to get the word spread. I don't really believe that you have to find some proprietary channel for distribution. Again, Slack would be another very good example. People just find and adopt it because it's the best product of its kind out there.
Great. Well, that will wrap it up. Thank you, Naval, for your time, and I hope you guys enjoyed the discussion.
Thank you.